Dividend investors, bonjour. This is Mike Leroux, founder of Dividend Stocks Rocks and passionate investor, wearing my favorite Grandson hoodie today. I love the band, but the thing is, it's still snowing outside here. That's the joy of living in Quebec, I guess, right? So we're in April. There's like 2 inches of snow right there, and I don't know if we're going to get the spring anytime soon. So there you go. Today we are talking about electric vehicle, EV stocks. Great buzzword. I am a dividend investor. How can I mash up those two topics together, dividend and EV stocks? That doesn't make sense, right? Actually, I'm not going to tell you about the next Tesla, the next groundbreaking company that will go on IPO. This is not my style. But I thought, well, if I'm a dividend investor and I want to benefit from this trend, because, you know, in investing, there's a lot about the narrative that is going on right now. And one of them is a lot of money is going toward EV stocks. How can I benefit from that trend? Well, I found stocks that are paying dividend and they will grow through electric vehicles. I could have talk about Albermarle. It's a classic pick here. This is the largest lithium producer. So we all know that lithium is used for battery in EV cars. But the thing is, it's obvious, and I don't like too much basic material companies. The problem with Albermarle is that they're kind of like the victim of their own business model. Since they're the largest producer of lithium, if they start to boost production, they will eventually kill the lithium price, and then their profit is going to actually go lower, which is not exactly a good thing for a business model, right? And as you can see from the graph right here, stock price has already risen. It is not a secret for anyone, and I'm not too sure that this is the best pick for EV stocks right now. You can pretty much find other companies that will do a lot better. The first one is still a pretty much obvious choice. It's Magna International, ticker MGA for the US, MG.TO for Canadian. The company is Canadian based but pays their dividend in US dollars. A little bit under half of their revenue is coming from the big Detroit automakers. What I like about Magna International in general is they are the largest auto part manufacturers. They have deal with the guys in Detroit, but also in Europe as well with big car maker brands. And they are making so many different parts that they are able to actually build their own car, which they're not going to do because instead they are spending a lot of time, energy, and money to develop auto parts in joint ventures with car makers. So when those car makers are spending that much time and money on developing auto parts, they're not going to switch their supplier easily. This makes Magna International business model very sticky, and it's also good because it creates a lot of repetitive purchases. And as a dividend investor, when I hear the word repetitive, I just love it because I know it means cash flow that keeps coming in all the time. Now, Magna International is not only a great business that benefit from economies of scales from an old industry, but they're actually forward thinking. They have identified 4 different growth vectors that are tied up to EV. First one, electrification, pretty obvious. Then we're talking about lightweighting, autonomous car, and smart mobility. So for electrification, they are building powertrain. They have the classic one, they have hybrid, and they also have 100% electric. What they are doing here is they are supplying demand for all kinds of powertrains. They have signed a lot of deals with EV car makers such as Fisker, and they are just following the trend. They have been able to be in contact with all the car manufacturers, and they will be able to produce those for them without any problem. Once you have decided to focus on EVs, you also want to have your car to be very efficient. And one of the key metric here is to look at the vehicle's weight. It's a good thing because Magna International offer one of the broadest offering in terms of lightweight design and manufacture product solutions. They will be able to supply demand and find innovative solutions for car makers to make their car lightweight and therefore more efficient. So that's perfect for electronic vehicle. When you think about EV, you're not only talking about the way that you power your car, but you also want to send another kind of like marketing message, which will be you're making the car for the next generation. You're making the car that will change your life. And you'll definitely not do it without having so much technology on it, right? So there's a lot of thought that are being built in for autonomous vehicles. Magna International is looking forward on this one as well, and they are developing components that will help cars to be more autonomous. We're talking about cameras, radars, ultrasonic sensors, so everything that will be able to tell the car there's something going on in your environment, that you need to brake, that you need to turn, and they will be also able to include those in their package. Finally, again, on the theme of efficiency, Magna International makes so many different parts that they are able to assign them and engineer them to make them easier and flexible to be part of any type of cars. This helps to create more efficient space use of space, and car manufacturers will definitely look forward to that because it will also help them to make lighter vehicles. One thing that I love as a dividend investor is obviously Magna's international dividend growth story. You can see there for the past 10 years, the dividend has grown at a super rate. We're talking about 14% annualized growth rate between Q4 2010 and Q4 2019. I am fairly confident it's going to continue this way. They have increased their dividend in 2020. They are going to increase it in 2021. So definitely this one should be part of your portfolio. Full disclaimer, I do have shares of Magna International, and I actually have shares of the two other companies that will be in this video. I have to tell you, I'm not doing buy or sell recommendation here. Do your own due diligence. My goal here is just to give you some good ideas about which kind of stock could benefit from electronic vehicle. If you like this video so far, give me a thumbs up, subscribe to my channel. I'm posting a video every single week, different teams, sometimes US, sometimes Canadian. So help me grow this channel. All right, so next pick is a smaller company in the automobile vehicle industry, which is Gentex. What I like about Gentex is that they have decided to attack a niche market and dominate it. They have more than 90% of market shares of auto dimming mirrors. And then you're going to tell me, well, Mike, what's the link between electric vehicles and auto dimming mirrors, right? It doesn't really make much sense for me. Well, the thing is, if you're building an electric car, you want to have the highest technology for all the parts, and the best technology for mirrors are made by Gentex. Pretty much all luxury cars have it right now. We're talking about roughly 25% of all cars are coming with auto-dimming mirrors, and when you think about it, 90% of them are made by Gentex, so pretty much there you go. You got a dominant player here. What I love about this business is they have focus on innovation. They spend a lot of money in R&Ds, and they have over 1,500 patents. One other thing that I love is while they are dominating in a small niche market, they have decided to use this technology to expand their business model. Now they're offering auto-dimming windows, not only for cars, but also for aircraft. So they're entering the aircraft industry. They are also entering technology for healthcare. So this company is moving outside of the zone of comfort right now, trying to explore different growth vectors, but at the same time, they will benefit from their own products and their own expertise to surf on the EV trend. They actually have a great set of products. We're talking about vision systems, dimmable device, as I mentioned earlier, and connectivity and sensing device as well, which will be part, as I explained in my Magna presentation, that we're looking for cars that will be more autonomous, that will be smarter in a sense that they will be able to detect what's going on in their environment, while Gentex is also a great candidate to be part of those cars. Another thing I like about this company, obviously, its dividend growth history. You can see it on the graph. Got a small pause in the dividend growth during the financial crisis of 2008. But before that and after that, we got a company that was able to increase its dividend year after year. So now we count 10 years of dividend growth, which is great, but even better, the company has absolutely zero debt. What does it mean? Well, it means that this business is able to spend a lot of money in R&Ds to make sure that they keep their edge, that they develop new patents and they improve their products that are already dominating their niche market. They also have enough money to expand towards new products, and they can reward shareholders. On top of that, it could be a very good candidate for a potential merger acquisition at one point in time, because the company is full of innovation, full of patents, with zero debt. It's looked like a great business to me. If you're looking for a business that can go through the next recession, imagine something that will last 3 years of down market with like a difficult economy, well, a company with no debt will be likely a very good candidate. Gentex should be on your list just for that. Now moving on to the last but not the least, definitely not one of my favorite tech stocks actually, and it's kind of funny because when I heard about Texas Instrument the first time, it was a DSR members a few years ago, and he said, yeah, Mike, would you mind looking to Texas Instrument? And I thought of my oldest son who was in high school and actually used those scientific calculators, and I thought, well, I'm sorry, but I respect your opinion, but how can a calculator maker could be such an interesting investment opportunity, right? But I found out that Texas Instrument is not making much calculators anymore. It's actually less than 5% of their revenue. They concentrate on analog chips. They're a chip maker, semiconductors. And they happen to have a lot of growth vectors going on. Actually, when you look at their revenue by end market, more than 50% of their revenue are coming from either industrial and the automotive industry, and this is where they'll be able to show a very strong growth vectors. It will be through the EVs. So it's great that the company is well diversified between various end markets, but I think that the most two important will be industrial and the automotive, because the company excels at making analog chips. And then a lot of investors will tell me, well, Mike, what's the link between analog and electronic vehicle, right? That's not necessarily something that jives together. Well, the thing is, analogs is what makes the possibility of things like devices to connect with human beings and to connect with the real world. So they are basically like sensors, and they're translators of data, of signals that will enable human to ask their device what's going on outside in the real world. And this is where electronic vehicle comes in. They need tons of analog chips. And guess what? Texas Instrument is one of the leaders there. The company is spending massive amount in research and development, and also in marketing. What I like about Texas Instrument is pretty much like if you had a team of engineers that are actually also salesmen. So they go knock on doors, they talk to their customers, they found out about their needs and the products that they want, and then they come back to their R&D team and they spend a lot of money on it. The business is making so much cash flow that they are able to do this part, but also be a very shareholder friendly company. They buy back a lot of shares, as you can see on that graph, and obviously also pay great dividend. Speaking of which, a lot of investors can tell me, well, Mike, I'm not too sure about Texas Instrument. The stock price that's the highest possible. When you look at the dividend, it's also at its highest possible. Since 2004, the company has never stopped increase its dividend. So we're talking about 17 consecutive years with dividend increase, 22% for the past 5 and 10 years, which is quite a feat. So yes, the dividend yield is low, but if you're then again looking for a company that is able to survive and thrive during the next recession, Texas Instruments should be on your list. The business is strong, 2.5 yield is definitely not something that is too bad either. And I have it in my portfolio for a while, since 2017. Very happy shareholder here. So in conclusion, the one thing that those companies have in common, besides they could benefit from the trend of electric vehicle, is also they are incredibly strong in their business, in their market, and they show a steady dividend growth history. This is my way of identifying companies that I love that should thrive in the future, because those businesses, if they're able to increase their dividend year after year, while technically they have growth vectors, management is confident in the business model, and they are likely going to thrive in the future. I hope that you have enjoyed this video. Give me a thumbs up, subscribe to my channel. Every single week you'll have a new video about different teams. Last week it was renewable energy. I think it was a very good one as well. Great opportunities right now because the market is down on those. And today we're talking about EV stocks, which actually think that will be on a trend for the next decade. We're just starting to have electric vehicles on the road. It's still a very small percentage, so there's a lot of money to be invested moving forward. And instead of trying to figure out which car maker will win the race, let's focus on companies that whoever wins will actually sell them products. And this is what will happen with Magna International, Gentex, and Texas Instrument. So hope that you have enjoyed this video, and until the next one, stay invested.